what's more likely? I don't know if you're a betting man, but what's more likely? A short-term extension when it comes to the debt limit or an actual default?
So, Frank, that's a great question. And I think we have focused in the markets on 2011 in the massive drawdown as these negotiations got really close to the brink. I'd like to remind folks about 2021. And we got really close, didn't have a deal, and then we punted for 2 months. And then we came up with a deal. I think that this is much sooner than Washington expected. This is absolutely a lot sooner than the market expected. As you mentioned, we have an emergency meeting a week from today. There's just not a lot of time. You add on Senate procedure, there's only time to do this once in the Senate, not to do it twice. So when we look at this, I'd say a very short-term extension is the most likely near term to allow there to continue to be time to have the negotiations on the larger points of some of the fiscal reforms, some of the budget cuts, maybe some of the energy permitting reforms that Republicans want, trying to put default off the table, because this is really, especially for DC, a very condensed timetable.
All right, I think a lot of investors are breathing a sigh of relief after you just said that. You know, just I think it was last week, Goldman put out a note that the debt ceiling limit would be reached in July. So again, June 1st is a big change from that. So let's take a step back. You just mentioned this meeting on May 9th with congressional leaders in the White House. What's on stake specifically, or what things are on the table, I should say, and what's at stake, specifically things that might impact investors? I think you just mentioned the Inflation Reduction Act, some other things that might be on the table.
Yeah, Frank. So I think the Biden position of there is only one way here of a clean limit increase is probably not the most likely anymore. Republicans, by passing their bill last week, were able to establish a negotiating position. In the Senate, all eyes have to be on Mitch McConnell. As much as we used to focus on Joe Manchin on all of the reconciliation bills, we're going to be focused on Mitch McConnell, because what he allows to occur in the Senate is probably going to be the final bill. So looking at some of those provisions, I've talked to a lot of investors who are very concerned about the clean energy provisions that were in the Inflation Reduction Act that are being removed in the House version of the bill. I don't think that gets in the final bill. But yesterday you had Senator Manchin talking about needing to have new guardrails on exactly how that money is spent. I think those guardrails are more likely now than before. We'll also see some defense cuts or some other budget cuts potentially added to this bill. I think those will be false positives because Congress is probably likely to do whatever they want on spending, even after this deal.
All right, so there's a few hot button issues here. I also want to mention ESG. You're saying ESG considerations in the Inflation Reduction Act and other areas will also be on the table.
Well, they're in the House bill. I don't think that the Inflation Reduction Act is going to get repealed at all. But when you look at the statements from Senator Manchin yesterday saying that the way in which the Biden administrations are implementing this, that needs to be changed. We shouldn't allow these tax credits to go to Europe, to go to Asia, that they have to really be about the United States. This is especially important for the electric vehicle market. Those type of provisions, I think, are part of the political off-ramp that gets, provisions that get added to allow Republicans to support this and also get support from maybe a Democratic senator.